Good afternoon. Holy banana bread. It didn't play the countdown. It told me, I actually got an error initially. Basically, it popped up and it said to me, hey, there's no internet connection, which of course there is. Um, and then all of a sudden it just went straight live. So it did not play our countdown. I use that countdown, guys. I use it to basically give a buffer for those who are watching the ads. So I'm going to ramble. I'll ramble for a minute. That way there we can get through the ad thing. So it is well, welcome to Easter, guys. Nice long weekend. I had 2 days off in a row. Holy banana bread. It was nice. It was nice. Of course, now it is back to work, back to the live stream, back to the market, all of that fun stuff. So we do have a market, of course, opening up tomorrow. Easter Monday, not a thing when it comes to the market. We're going to see, what is it going to look like? What are you guys expecting? There's definitely been some talk over the weekend about Trump getting annoyed and, possibly bombing bombing power plants again. So there's definitely a little bit of that in the air. So it's going to be really interesting to see what tomorrow is going to look like. We will get a general idea of what's happening with oil probably before this stream is done. Normally, I think it's around, 6 p.m. Eastern, we start to get data in on oil. So we might get a chance to see that today. Yeah, it's kind of a cool thing. The topic for today is recession. So yeah, I had a question a super chat the other day, and it was about recessions, whether this this next GDP, so for Q1, whether it's going to push us into a technical recession. Now, if it's negative, then we're technically in a recession, and that's kind of what I said the other day. And I thought there was a good chance that we could, because we did have two positive months. January and February, they were both up. Not by a lot, but could March be very devastating? Now, I thought, you know what, it's a rough month. Look at the volatility. Look at how far the TSX has fallen, for example. So I thought March, yeah, there could be a chance that March is going to be, pretty negative. Maybe even negative enough to drive us into a quarter. But then I've been thinking about it on the weekend. So yeah, I get 2 days off and I think about it. And there's one thing I think I didn't take into consideration when I said that the other day. That is, we're kind of benefiting from the increase in the price of energy. So, and that is a big chunk of our GDP. So here's the thing. I think it'll be close, but we may not get negative GDP. There's that possibility. My gut says, my gut's uncertain, really. I feel, if I use my heart feels like we're in a recession. But here's that thing. When you take oil into consideration, I don't know. So in fact, you know what, guys? It's time for a poll. I'm going to start a poll. It's going to be very simple. Will March drag Q01 GDP negative? That'll be the question. And here, let's get some. Let's say yes. We'll say no, and I'll add an option. Too close to call. Why not? All right, I'm going to just drop that up there. There we go. We got a poll. I want to see what you guys think. While, of course, while we do that, first of all, I'm going to just move my side screen off of me, because if we head over there, I don't want to get that black hole thing, where, you know what I mean, where you see me going on and on forever. And I can go on forever, but not that way. So let's jump on into chat. Let's jump into chat. Let's see what you guys are doing. Let's see how your Easter is. I am curious. A Punky is in to start it off with a hello all. And I don't know about everyone else, but I am looking forward to tomorrow's harvest dividend payout. Nice. Yeah. I'm always looking forward to dividend payouts. I like it. I like it. A second person. All right, yeah. I think there's a few people. There's a few second persons in there now. Punky, for sure. All right, and let's see. Hi, Candace. My week wasn't too shabby at all. Well, no, I was going to say at all, but no. Hi, Candace. My week wasn't too shabby, all things considered. I'm looking to capitalize a little more with the dividends I'm going to receive tomorrow. All right, fair enough. And we could, if all of that talk over the weekend, now we didn't get, now here's the thing though, I'm going to put this out too. We've had the talk already, I'm going to blow up your power stations. Yeah, boo-hoo, you haven't done it yet. So, it's not as strong of a threat as it was the first time. So maybe he'll blow up power stations. Maybe he won't. I don't think he will. But this administration does sometimes surprise me. So that's one thing that leans towards us not impacting the market as much as it would. The other thing is that we all kind of came into this weekend thinking we were going to get thinking we were going to get boots on the ground. We thought that, Karg Island was going to be, they were going to have a hot party there and not the dancing time kind. So we kind of thought that on the weekend, and it didn't happen. So that might give us some stability tomorrow. So it could be very interesting. I don't think we're going to have a huge green day. I don't think we're going to have a huge red day either way. But at this point, I'm gonna, unless something else happens between now and tomorrow morning, I'm kind of leaning towards green. Now, especially on the TSX. Maybe the US market, maybe they're a little more susceptible to Trump speak than Canada. All right, Stan is in the house with a hello all. We have a Sky. Happy Easter, everyone. A happy Easter from Punky Piney. Luke says happy Easter all. Hopefully good stocks are as easy to find as chocolate eggs. So were you at a good egg hunt, Luke? Now we had a lot of rain last night. Like it rained like it rained a lot. And today it's kind of still damp out, kind of still dreary, but it looks like the rain for the most part's gone. Lance says, good afternoon, everyone, and happy Easter. And Samantha's in the house. Happy Easter all. Did you devour your chocolate bunnies as eagerly as the Easter goat? Yes, and those two Easter goats, they're being retired at the end of the stream. They'll be retired. But yeah, Easter. I had one chocolate bunny. I think I had two chocolate bunnies through the whole period. I shouldn't have had two. I should have only had one, but I had two. So, no, not at the same time, obviously. I had one only because I really like, and I told you guys about how I like to dip the ears into my coffee. It works pretty darn well. All right, Lance, I think there's still more red ahead. Just happy to hear the second pilot was recovered safely. Yeah, it's good that the pilot got out of there. I did not want Iran to get their hands on him because, they're kind of a country that has a reputation for not being the most polite. I mean, if you're going to get captured by any country in the world, you probably want to get captured by Canada. I'm just saying. We'd be nice to a prisoner of war. Larry says, let's see, he's getting so desperate it's pathetic. Picked up tons of ING in 2 weeks. Taiwan rings out runs out of power, even if he doesn't do the dumb thing and attack power and desalinization plants. Yeah. Yeah, no, there is going to be an energy crisis. I think we're at a point that enough damage has happened that this is not an easy fix. It's definitely not an easy fix at all. All right. Samantha says Warren Buffett is still holding on to his dry powder. He's waiting for a big, big drop. Could it be this year? Ah, well, I don't mean to sound cruel, but Warren, you're running out of time, dude. You might want to get back in the game sooner than later. All right. Yeah, I mean, there is going to be there's going to be economic damage from all of this. There's no way around it. Economic damage is coming. It will certainly impact the economy. Now, the market in the last year has been very resilient compared to the economy, and that's surprising. But here's the thing. Can they keep that up? If we end this war soon, like if he does end it by the end of April, can the market just move on like nothing's happened? And how long can it do that? That's another question. Lance says he said he's now here to make 5% profit. He thinks thinks it's going much lower. Some experts are thinking the same, but it might now be a sharp crash, a slow decline. Who knows with Trump's tweets? Anything can happen. That's the thing. And Warren, even though he is holding out and he's thinking that there's going to be a bigger drop, I can guarantee if you were to look at every time he's had that feeling in his life, it hasn't always been right. Sometimes it has, absolutely. And that's the thing. It's hard to predict what the market's going to do. Honestly, the market we should have had a lot rougher market in 2025. But it came together, especially Canada. I mean, look at Canada. Who would have expected Canada to be one of the top markets in the world in 2025? Nobody, I don't think. I don't think anybody had that on their bingo card. All right, Mary is in the house with a happy Easter. Hello, Mary. Mary's our official captain of the like button. I'm learning how to talk again. And guys, if you've not yet hit that like button, do it now. I'm going to have some coffee since you guys are going to be busy clicking that like button. Oh gosh, very, very good. All right, but it is Easter, so I'm not going to obsess over the like button, but Mary might. I'm not going to obsess. Lance says not here. Okay, all right, well, I hope you get here soon. Elaine says, hey all. Hi Candace, telecoms are down, Rogers got slammed. Yeah, absolutely. Yeah, like actually here. Let's, oh, I guess I need to bring up the window. I need the window. Let's share the screen. Oh, we'll go with the entire screen. And here we go. Let's bring it up. Boom, bang, there it is. And oh, I need to stretch it over a bit. There we go. We'll get rid of that blue. Yeah, let's go to, whoops. All right. So here it is. Yeah, look at this is Rogers. So Rogers on Friday, they were down 5%. So definitely a little bit of a slam for sure. And even going down 5%, I mean, they did recover a little bit towards the end of the day. Not a lot, but they did recover a little bit for sure. So yeah. Now, when we head over here to news, I'm just seeing if there was anything. There really wasn't anything interesting in the news. But it wasn't just Rogers. Telus and Bell also fell as well. Rogers just kind of fell a little bit more. Although, apparently you could have won a ticket to the Blue Jays opening night, but well. Let's see, we'd feed them Easter dinner. Yeah, we would, absolutely. Larry, TSMC shutdown will take weeks to repair just the facility. No chips, no production anywhere in the world. Yeah. And here's the thing. I did not hear about, so TSMC, that's Taiwan Semiconductor. I did not hear anything about it. Neither did Zyborg. Wait, what news am I missing about TSMC? Haven't heard anything. Yeah, that's weird. I have not heard anything about that either. Mind you, I really wasn't paying attention. I was watching dumb videos most of the weekend. I was like, first, I can't remember the last time I had 2 days off in a row. It's been a long time. So, yeah, I kind of wasn't really that much in the news, but hey, you know what? Let's head to the news. Let's just take, here, we'll go to this one. Drudge is always very to the point. Praise be to Allah. Oh boy. Let's see. Iran drone attacks Kuwait oil complex. Oh boy. Economic pain. White House. Yeah, I'm not seeing anything here, but you know what? There's an easier way to do this. Let's just go to Google, and all we need to do, TSMC shutdown. Here we go. Let's take a look and see what we got. All right. Let's see. TSMA to phase out some. Okay, that's just all right. Let's go to the news. Qatar helium shutdown puts chip supply chain on a 2-week clock. So that may be part of it. After power outage caused by September shutdown. All right, that's older. Yeah, so I don't know what is going on with Taiwan Semiconductor. So Larry, if you have more information, please share. But the helium shortage, that could certainly impact chip makers for sure. Helium is really important when it comes to designing those chips. I mean, it's critical. So we could see shutdowns just based on the fact if they run out of helium, they're kind of at a standstill for the most part. All right, Lance. Warren has also been called out for insider trading and has been shown he would not have outperformed the S&P 500 as well as he has without that information. Who knows? Is it a he said, she said? Maybe. I'm not sure. All right. Mark is in the house with a happy Easter, goats. Absolutely. And Larry says, Iran blocked all energy going to Taiwan a week ago. So here we go. Taiwan will have no power in 2 weeks. Okay. All right. Fair enough. All right. Yeah, that's kind of what I guess that might have been the piece that we were missing. Holy banana bread. Hopefully, I really want to see this conflict kind of end. I mean, I don't care what side of the fence you're on. Maybe you think we had to, or, that the U.S. had to go into Iran. Maybe you think they shouldn't have. It doesn't matter. To me, either way, I want to see this come to a conclusion. I'd like to see oil starting to move again. I'd like to see... Well, the problem here... Well, here's the problem with the helium, though, which is one of the things that I was mentioning. The plant... the big processing plant in Qatar, I mean, it's, helium is one of its side products, but it's also, they produce enough LNG that it's a significant amount. It's a very big chunk of the world's supply. So, yeah, it's going to get messy, guys. I think it'll get messy before it gets any better. So, I don't know. All right, how are you guys doing on this poll? Let me see here. All right, let's see here. All right, so 58% believe we're going to get a technical recession here in, when did they release? I think they released this one in May, or it could be the end of April, but, we should get the data towards the end of the month for sure. Either one of the sides or the other. I don't know the exact date. But yeah, so, whoops. Let me pull that back up. All right, so here we go. So 58% say yes, it'll be negative. 16% say it's not, so it's going to be positive. 26% say it's just too close to call. And there we go. We'll leave that go. We'll leave it run for a little bit longer. But right now, most of you are expecting a technical recession. Oh boy. Let me ask you this question. Do you feel like you're already in a recession? And taking that one step further, are you treating your pocketbook like you're in a recession? That's something I wanna know. I wanna know how you guys are handling this for sure. All right, now let's see here. Lance says real yields DFII 10 are slowly falling, which is bullish for metals. With that and first notice day at the end of April coming up, I'm optimistic for a rise in precious metals later this month. Okay, fair enough. Fair enough. Yeah, I would certainly like to see a bump in precious metals, of course. But at the same time, I really don't mind getting, I don't mind. Like if we get some of these bigger dips in April, I'm actually okay with it because, I look at it this way. Like if you just look at the challenge, so the 0 to 100K challenge, um, you know, every time we have these big dips and I can grab some stuff super cheap, it's one step closer to pushing the challenge to its conclusion. Now, mind you, we're only about a third. We're not even quite a third. We're almost a third of the way to that 10,000 mark. So that challenge will be going for a while, no doubt. Lance says, but I think one more dip first. Okay, all right, yeah, buy the dip. All right, Anise says, good afternoon. Well, hello, niece. How are you? Here's a question. I'm going to assume that you had a good one, but how was your Easter? Did you have a big rabbit? Gotta know. Lance says, my pocketbook is a little sore after my trip. Might have to eat some Mr. Noodles and hot dogs for a while. Oh, yeah. But you got some heat. It was the Dominican, right? I think that's where you were. But yeah, that's a thing. But you know what? Here's the thing. With the price of aviation fuel going through the roof, and airlines just recently, I know WestJet just said they were adding surcharges to their, basically to compensate for the fuel costs going up. Amazon announced that they're adding surcharges to people who are selling. So they're not throwing a surcharge on you, but they're throwing a surcharge on anybody who's using Amazon as their selling platform. And I think Amazon's putting 3.5% onto them. So obviously, if you hit them with 3.5%, they're going to mark things up 3.5%. But nonetheless, one big tip, guys, with Amazon, don't just blindly grab the first item you see, because sometimes you'll have 3 or 4 different sellers that might be selling the exact same thing, and sometimes the prices can be radically different. Like I've seen people who put something on Amazon, like actually, I'll use coffee. So a normal jar of my Maxwell House instant coffee, it's normally about, well, it used to be about $4.99, but now I think it's closer to $8. But there is always this one seller. Like sometimes if Maxwell House runs out, if my other sellers, this one person will always put in some Maxwell House and they'll try to sell it for like 20 something dollars a bottle. Of course, I'm not going to do that. But you know what? If you're not thinking about it, you just click on it and you don't even really pay attention, you could accidentally pay a lot for something that's, not that expensive. So always double check, guys. Larry says, I don't spend any money. However, the one I'm saying isn't treating my credit card like we're in a recession. Yeah. And here's the thing. I mean, I think the U.S., I believe, oh my gosh, now I don't even remember. I was trying to think if the last GDP report on the U.S., I think they were still positive. I think it was still positive. So we could, if oil does, like up here in Canada, if all of that energy, if all of the price of oil and natural gas and all of that that's getting pumped into our GDP, if that prevents us from going into a recession. So in other words, if the 24% of you who think that it's going to be positive, if you guys are right, then the earliest we could have a recession would be I'm not going to say the end of the year, but it would be at the end of Q3. So they wouldn't be able to even, we wouldn't even know there was a technical recession until the end of November. That's if we got the next two in the negative. But that's the thing. A technical recession, I think there's a lot of people who I think right now have it more rough than the last time we actually were in a recession. So that's kind of an interesting thing to keep in mind. Niece says, let's see, it was nice and hopes you and all the others also had a nice Easter. Yeah, I think so. I hope so. I just like the fact that I had 2 days off. It was great. Let's see, Lance. Yes, surcharges starting this week. Some are percentages and some are flat rates and dollar amounts. Easter dating. And let's see here. That is a good question. I'm a seasonal worker, so I've been treating my pocketbook like we've been in a recession for the last little bit. Well, there's a lot of people I think that are. I mean, and that's going to be one of those interesting things. So, you know what? Here's to me, might be a reflection of when times are bad, is if we head over here, and I'm going to pull up a stock here. Pizza. Pizza. Let's take a look. I'm going to pull up the 5 years. All right. So yeah, I mean, over the 5 years, Pizza has done pretty darn well. But it is interesting to look at what is happening in some of these periods. So here's one of the ones I find really interesting is right here. So this big peak, that was as we were in a bear market. We went into a bear market right here towards the end of 2021. So, and that went until about the bottom of that bear market was right over here. Let's see here, right around October. So yeah, they basically did a big peak, then they fell, then they peaked again. So interesting. Because I was thinking to myself, if you're in a recession and money's tight, you're probably not ordering pizza. Maybe. Then again, it's hard to say. People really like pizza. Pizza may not be the one. There's actually oh my God, there are some really strange indicators. One of the really strange ones is, and how does this one work? Let me try here. I'm going to put this down. Guys, this is weird. It's an underwear indicator. I better put in economy too. All right, here we go. Yeah, right here. So these are just some of the strange indicators that we have. So here's an interesting one here. There's a men's underwear. There's cardboard boxes. Giant what the heck has giant skeletons got to do? That's kind of interesting. Let's see here. But where's the underwear one? Just give us the underwear one. That's what I came here for. There's cardboard boxes. Oh, story continues. Okay. Where's underwear? The little treat. Giant skeletons. Let's see. Oh, so apparently when the economy is bad, it says that there is a lackluster demand for giant 12-foot skeleton sales at Home Depot. All right. That's funny. Oh man, they kind of teased us with the underwear, right? And then they really didn't deliver on that one. Let's see here. The lipstick index. All right. Little treats. I guess, I don't know if underwear would be in there, but yeah. Anyway, there are some strange ones out there as well. Why the heck? All right. I just thought there would have been something more in here about the underwear because I read it somewhere. Actually, let me try somewhere else. What men's underwear sales can tell you about the economy. Here we go. This looks like it will give us better information here. So this is men's underwear. So if you gauge the direction of the economy, look no further than the data. So here, give me the base. Give me the basics. All right, so yeah, if underwear, okay, now I got it now. So if underwear sales fall, so basically it means men are out there wearing their underwear with holes in it and that's falling apart, then you know the economy's really bad. I think that's, yeah, that's the thing. Oh boy. All right, let's just move to Ivy Bean. Is it a good idea to hold off investing larger sums of money into the stock market and wait for a possible drop till later in the year? Um, if you do that and we have a drop later in the year, you'll look like a genius. However, there's no guarantee. There's no guarantee that we're going to get another big drop. I feel like we probably will see some bigger dips along the way, but I don't know when things are going to turn around. This market has been kind of defying things. So it's an interesting, we're kind of in an interesting time, to be honest. So yeah, dollar cost averaging, that is still your best bet. So even though the market right now, if you've got a big hunk of money and you're sitting on it and you're like, gosh, should I deploy it now? Should I wait? I would maybe do a dollar cost average strategy, sort of look like now, like maybe say, okay, well, I'll deploy it. Things should be, if we do have a fall, maybe we'll be recovered within a year. So that's 52 weeks or 12 months. So maybe you might want to do 8-9% of it a month and, just spend 8-9% as you're deploying throughout that year. So that might be the most profitable way to go. Statistically, it tends to be, and a lot of it has to do with, here, let's go to, all right, I just want a whiteboard. All right, perfect. So here is a whiteboard, and I'm going to, oh, you know what? I'm going to do this a different way this time. Instead of drawing, a fake chart, let's use a real chart. We're going to use, we use VFV, because this here is a very good indication of what the S&P 500 has done over time. And let's just go with we'll go with 5 years. Perfect. All right. And let me just, there we go. I'm just going to zip over here and grab it. Perfect. All right. Now let's go back over to our, all right. And I want to upload. And we're going to upload, come on, this here. Nope, we're not going to upload that. We're going to upload the screenshot. Boom. All right, there we go. We got it. Let's get rid of that. All right, so let's drag this out here. All right, so here is the S&P 500. Now, I am going to lock this. The reason I'm locking it is so that I can't accidentally move it. I don't want to be able to move it as I'm drawing on it. All right, we're going to grab a tool. All right, so I got my marker here. So one of the ways you could look at it is sometimes you'll get people, like you might be here. Let's say you're here and the market comes down and it comes down here and you're thinking, right here, you're like, oh yeah, look, the market's been moving down. We're definitely going down. And there were people thinking that. So there were people that did not spend the money they had here. They were waiting. And well, the market didn't. The market came back up. All of a sudden, as they're up here, they're just realizing, oh my God, I missed that dip. And you know what? They've missed that dip forever. It's gone. It's gone. So that's one of the dangers of trying to buy the dip. Now, if you are a dollar cost average person, and actually, you know what? I want a thin. Let me grab a thin one. Actually, and what color do I want? I'm going to go with, yeah, let's go with, we'll go with red. I just want red, I think, for this. All right, perfect. I'm just going to click over there. All right, so if you're a dollar cost average, so basically what that means is, you're buying at regular intervals. And we're not going to worry about this time frame. I just wanted the picture. All right, so each of these red lines is where you're buying. All right, perfect. There we go. All right. Sort of looks like a zipper in a way, doesn't it? Boom. Does this kind of remind you of Mr. Dress? No, I don't know. Just draw. All right. Anyway, so if you were buying and that's your schedule, all right, well, that's kind of cool. So when you look at this, you are basically getting an average price. So you'll notice, yeah, you know what? You did pay towards the top here, but you paid a little bit lower here. You got the dip. You managed to get the dip. You didn't get the absolute best moment of that dip, but you got a pretty darn good moment. And you got all the way up. You got all the way coming down. Here you got the best part of that dip. So in fact, you actually got the best dip out of that whole chart. You're right there. So when you look at this, what you end up doing, and I'm going to change my color now. We're going to go green. Let's go green. What you end up doing is you end up creating something that looks similar to that. And this is kind of just an average. So you might be thinking, wait a minute, those are above the average. Yeah, but all of this pulled it down. So that's more of an average price. So that's kind of what you're pulling off with that dip. Now, when somebody, let's see here, let's go with blue. We got our blue person. So this person here is going to be trying to buy the dip. All right, so they're in here, they're deploying, and they're like, oh, I'm gonna wait. Oh crap, I missed it. So they end up buying here. And then they might be waiting here, but then this happens and they might panic and buy here. Let's just say they got really lucky here. And they're looking at places that they can buy the dip, and they may not buy in here. They're expecting it to crash. So, by the time they buy, they might buy in there because when they see it turn around. And here they might miss. And up here, they're probably, they're waiting. Will they grab here? Probably not, because they think it's going to still go down, but it doesn't. And then bang, bang, bang. And all of a sudden, they might be getting in here. Why didn't they get the very bottom? Because after Liberation Day, they're thinking, oh, hell is going to break loose. We're going down big time. But we don't. And, maybe they're waiting for the dip up here, and it just, they get a little bit in here, so they might say, oh, man, I'm going to buy. And now, right now, they're waiting now for the dip. They're waiting for a bigger dip. So when you start to look at these, all right, oh boy, and they got a few up here. They got a little bit down below here. But the reality is this average is going to be probably, it's not a straight line, guys, but it's probably going to be closer to this. It is going to be a little bit higher. Now, I was generous with where they hit the dip, but in typical fashion, that person who buys the dip, a lot of times they're missing it, and sometimes they can really miss it. So I was being, like I said, I was being very generous in this example, but they could have very easily been like that. Absolutely. Whereas, like I said, when you're dollar cost averaging, you are getting that fair price. You are, you're not worried about missing a dip. You're not worried about trying to time a dip. You're just chugging along like normal. And if you're a long-term investor, you should be dollar cost averaging. So DCA, that's your best route. Now, you can do a hybrid version. And what I mean by a hybrid is, let's say, for example, let's say you have, let's say you invest $1,000 a month. So if you're investing $1,000 a month, you could do something along this line, is you could DCA most of it, so maybe 800. So DCA 800, have that on a regular schedule, and then, you could buy the dip with the other 200. So if you find a dip in the month, you would just, you would put your 200 towards that. So that's a way that you can sort of look at it and sort of say, okay, yeah, this is great. This is a way that I can still get a really fair price and maybe get a couple of deals along the way. So there's definitely ways that you can do it. All right, Zyborg says, men buy underwear when they need it. One batch every 8 to 10 years. Says more about cyclicality than recession. All right, maybe, maybe. And Tom says DCA is the way. There we go. Of course, as soon as you said it that way, it made me think of the Mandalorian, but I don't know. All right, Nice. Canada should expand from America market. Did see a video about you will put money in an old train track to a harbor, plus you building LNG facilities, great for exports, imports. Yeah. Yeah, I think so. Like one of the things, at least on the LNG front, so the Trans Mountain pipeline, that one there, they're going to be doubling basically its capacity, the amount it can transfer to the coast of BC, and that's fantastic. That means that we could sell, basically twice as much LNG right now than what we were doing. So I like that. I think that's pretty good. All right, Rundu says, Happy Easter, Candace, and all. Xenial, let's see, the Microsoft charts looks like an inverted U, sadly, if you compare it to this. Yeah, Microsoft, oh boy. And here, well, you know what, let's pull up the 5 years of Microsoft and look at it compared to this. All right, so MSFT. And we are going to grab the US version here. Well, I'm going to hopefully MSF. Oh, no, I want MSFT. There it is right in there. I knew it was in there somewhere. And we'll pull up the 5-year version. Yeah, here we go. Here we go. So yeah, here is the 5 years. So the interesting thing, actually, sorry, that's the 3-year, 5 years. Here we go. The interesting thing here is, and this is something you can see, this here is that last bear market right in here. One of the things really interesting is at the bear market, tech actually went into it first. So tech started around, so well, technically, yeah, you could argue that that it was still close to the end of November, but there was trouble. Like tech started slowing down in November of 2001. And then, yeah, here it is. And you can sort of see, once again, down here. Here would have been, like, their low was right there, October 31st. And then they turned around. They came back up. Healthy growth. This is healthy. Now, this is kind of interesting. Like, I think this here is AI hype. This big block up here. So you got to ask yourself, are they really down as badly as it looks? And probably not. I mean, if you were to draw a fair line through this, you can almost knock off the top half of this. So it might be, and this is a situation too, and this is what, yeah, I guess as an investor, it's probably worth thinking about, is sometimes if you get a hype base, I don't want to call it a bubble, but I'm just going to say a hype like this in the charts, sometimes they never fully recover that, at least not right away. And that kind of happens. Like, look at here, like here coming out here, this was coming out of the pandemic, that happened. Then we went into a bear market. So it did recover that eventually, and it will recover this eventually, but maybe not right away. Even if the market does go green, we could see a situation where if you look at a straighter line, it may move so it may get there like up over here, wherever that is. That's way off the chart, but it'll get there eventually. So it is something to keep in mind. But yeah, lately Microsoft has definitely fallen big time from where they were at. But on the bright side, they're a blue chip company. They've weathered all kinds of stuff like this before. Well, not exactly like this, but just economic wise. And they've got a pretty deep moat. They're going to be fine. They're going to be fine, guys. All right, Mary, oh boy, Mary's in the house, and she is, she's got those likes going. So guys, maybe you haven't been hitting that like button. Definitely do. I'm not going to nag you guys today. It's Easter. But I always appreciate it when you do, because it does help the channel a ton. All right, now, while you guys do that, I get to have some coffee. Ooh, that's so good. Microsoft at 230 was nice during COVID. Yeah. And actually now, guys, we have to go to that 10-year drop now to see COVID. Because, yeah, here it is back here, COVID. And, yeah, right in here, you could get Microsoft nice and cheap. So the low on COVID here, let's see, 135, was that the lowest? Yeah, so if you had now mind you, you'd have to almost have been a swami to catch the 135 Microsoft, but it happened. Nobody was prepared for that. And the problem is, this is that type of dip. So when we had COVID, I think a lot of people, when that dip happened, expected it to go much further. I think people were expecting the worst. I mean, I remember my mom was like, this is it. This is the end of the world. This is how it starts. I don't know. Since then, maybe she's right. But, I think a lot of people expected it to go a lot lower. So I think a lot of people missed that dip. I missed that dip. I thought, well, heck, that might go a little lower. But I think a lot of people missed that dip. Nice. Europe have seen how Trump behaves, and more government want a European alternative in software in case Trump or another president pulls the plug. Yeah, you see, that's a thing. So forget about Trump at the moment. But the fact that America, and I don't care who's leading it right now, the fact that America has that much power to really upend everybody on an economic scale trade-wise, nobody's going to forget that. We don't care. No matter who the next president is, it doesn't matter. Sure, will relations probably get better? Absolutely. Will the tariffs go away? Hopefully. But the lesson is not going away. Countries have learned. Countries are, it's not just Canada. Canada's been diversifying trade like crazy. But everybody, I think Europe's diversifying trade. There's a lot of people. I mean, I bet you, and I'll tell you, China loves this. China loves what Trump has done. Trump has played right into their hands. China is like, countries now want to trade with us. They want a reliable trading partner that's not the U.S. And China's sitting back going, love it. We love it. So yeah, it's an interesting thing. It is definitely going to be an interesting thing. And it's going to have very wide-reaching impacts for years, like absolutely years to come. Doorpat, are we watching Trump melt and his temper tantrums? Why wouldn't someone take away his phone, please? The recent tweets have been unhinged. I have not seen his recent tweets. I have not really looked this weekend. I know there was stuff about him getting really angry at Iran and threatening the power plants again. But yeah, sometimes I think what Trump needs, and I know he'd never let this happen, is, do you remember when Elon got himself in trouble with his back with Twitter? And he basically was babysat for a while. People would have to approve his tweets before they went out. I think Trump needs a babysitter. I think he needs someone to sit here and look and read it over and say, okay, now that you're a little bit less angry, Donald, how about we write a nicer tweet? So that's something I want to see. Tony, retiring in 7 years, needs some help in what to hold in the TFSA. All right. Yeah, I mean, that's the beautiful thing. That's what the channel is all about, right? Is what you can put in your TFSA. And there's definitely going to be lots of ideas on there. And you got to sort of look too. You've got 7 years. So you don't, I don't think you need to go straight into income with 7 years left. You could certainly have some income. I think at the 7 years, I see that as kind of the beginning of that transition towards income. So, a lot of, you can have a certain amount of growth, certain amount of income, a good balance, and sort of with a longer term plan. So 7 years it's still a good amount of time. So that's the lucky thing. You still got a time to at least get some good growth going, to try to sort of help buff up what you do have in the TFSA for when you do retire, if income is your goal at that point, and usually it is, that gives you an opportunity to really push it forward. Let's see. Lance, what do you think of blocks? I think the issues with the Strait of Hormuz will push countries and companies to grow to more clean energy. Blocks, BLDP, and LPS are three different strategies in Canadian clean energy. Yeah, I think this is going to work. I think clean energy is going to like this on the long term. So, oil's still king. We're not ready to really go full clean energy. And in a way, Pierre Poilievre, one of the things that he's been saying lately is that we should look at, canceling all of any kind of taxes on energy. So probably, well, obviously the industrial carbon tax, I think, is the main target of that. But I agree, even if it's just a pause, even if you throw like a 2-3 year pause on it, because people are struggling, and that would be a good time to sort of step back and give people a little bit of a break, because, it's gonna get more rough. Because even if this war ends soon, there's still a lot of damage. There's a lot of damage. It's not going to go away quickly. Larry says, I wanted to buy into the credit card for Europe since Trump is blocking Visa and MasterCard from European judges. Sadly, the company is private. Oh boy, what can I say? Robert says, this channel becoming a liberal chat box. See ya. It's funny. I'll address it. I get accused of being too liberal. I get accused of being too conservative. I'm very, I'm what you would consider, I'm a small C conservative. I'm not very far right, but I'm pretty much in the middle. I appreciate opinions from both sides. No problems about that. But a liberal chat box, I don't think so. I would say not. I would say not. I will report on what's factual. I will, and I will report on good and bad ideas from both sides of the House of Commons, I guess we'll call it. Yeah, all that fun stuff. Larry says, I'm right conservative, but can change my mind when leaders make horrible decisions. Yeah, absolutely. And that, to me, that is the thing. It's all about, it's about actions, right? I look at it this way. If one area that I pretty much, I'm not very, if somebody's really far left, I'm probably not going to agree with them. I'm probably not going to agree with them very much. However, they can still have a good idea. Also somebody on the far right side, they can have great ideas too. And that's kind of that thing. I like to be able to recognize, like, there used to be a time, and I guess things have gotten a lot more polarized. Where you can't take people with opposing opinions now. It's kind of like people are at that point where it's like, gosh, you don't believe what I believe, so I'm not going to listen to you. I'm the type that if you have an opinion I don't believe in, I'm going to listen to you. I'm going to absolutely listen to you. I could be wrong, or most likelihood, in most cases, I find we're usually both wrong. Usually the truth somewhere is in between our opinion. So, it's easy, it's easy to believe in something if you at least got some grain of truth in it. And that's both directions. So it does tend to go that way. All right. Mark says, bye, Robert. Bill, REITs are a good option for TFSA. If you were considering holding some for the dividends, makes the tax burden on the distributions go away. Yeah. So REITs, the distributions you get from a REIT, 100% taxable, because they don't pay taxes on their income. They pass that on to, their investors. So yeah, REITs belong in a TFSA for sure. And, the big thing I would just say with REITs is just, not all REITs are equal. So at this point in time, I like industrial REITs. I think those ones are really good. Any kind of healthcare REITs or even REIT-like companies. So, for example, in the last, in the last 0 to 100K TFSA challenge, the number one total return in my portfolio for the length of the challenge, Extendicare, and they run long-term care homes. So, that's a thing to sort of keep in mind. Always sort of keep your keep your pulse on what's happening. So one of the dangers as well with REITs right now is if we do get to rate hikes, if rate hikes start happening this year, they do tend to impact REITs. REITs will usually fall a wee bit with them for sure. Also utilities, and I like utilities a lot, but that's just something to keep in mind. Now, I will say on the bright side is that as much as people talk about rate hikes coming, I don't think it's going to be a lot. I don't think we're going to get hit big time with rate hikes. Like, it will not be anything as aggressive as it was the last time when we were coming out of the pandemic. I think, if we see rate hikes this year, I can't see more than 2. In fact, I would not be surprised if it was just 1. So it's hard to say. There's a lot of data we're still waiting to come in. So, for example, before the next Bank of Canada meeting on the 29th of April, we got jobs data coming in. If that jobs data is horrific, so like if unemployment goes up even higher, it could be enough to keep the Bank of Canada in the pause that they've been in now for a while. And that's kind of where I'm leaning right now. I haven't seen, obviously I'm waiting for that data, but I think that data is not going to be super great. Lance, in the 72-hour time frame, Trump gave Iran to open the strait, still up in the air. Isn't that supposed to be decided by Monday at 8 p.m.? What's your thoughts on that? Yeah, I don't know the exact time frame on it. Like I said, I had 2 days off. I was not paying a lot of attention to news. But now keep in mind, he's done this before. And yeah, I have a feeling that, yeah, he might do it again. He might extend it, or it might just, I don't think it's going to happen though. So, I really don't think. Let's see. Are we predicting how long the red would go? What's the result of the poll? So yeah, what we're predicting. So this poll, and here, let me pull it up. Actually, here, I'll go big screen for a second so you guys don't have to see the the black hole. I'll end the poll, and let's see here. I'll try to end the poll. Where is the poll? Where is my poll? All right. Oh, weird. All right, let's see. Let me refresh. I'm gonna refresh this page because for whatever reason, it was not showing me my poll. Oh yeah, my poll's gone. Oh no, here it is. Here it is. There we go. All right. So, all right, let's just end the poll. And that should drop it right into chat here. There we go. So will March drag Q1 GDP negative? Right now we've got 59% of you believe it's going to. Too close to call comes in second with 22%. And 19% think no, that it's not going to. All right, very cool. So yeah, the overall feeling is that, technical recession. That's the overall feeling. Is that going to be the case? Well, we're going to have to wait to find out, obviously. But I did put the question earlier to not ChatGPT, Grok. I went with Grok. Let me pull up Grok's response. Here, let me see here. All right, let's see here. All right, this is what Grok thought. Let me drag it over. Oh, and here, we'll go back here. So this is Grok. So Grok says no. I do not expect Q1 2026 to deliver negative GDP growth, and therefore Canada is very unlikely to enter a technical recession this quarter. All right, now why? Let's see why Grok. So Grok always, that's what I like. Grok is very good financially. Like out of all of the AIs, I think Grok tends to do the best on some of the financial questions. So here, okay, so let's see, so here is our recent GDP reality check. So Q4 2025 was weak. So real GDP contracted by 0.2%. Yeah, exactly. I was mentioning not by a lot. So that was according to Stats Canada. That was the second soft quarter in 3, but not enough to technically trigger recession because Q3 was positive. All right, so there we go. Now, so let's see here. Full growth 2025 came in at plus 1.7%. All right, that's cool. But that's not really what we're looking at. What we're looking at is this Q1 data, because our last quarter was negative. So January, so real GDP rose 0.1%. So that's not a lot. That's not a lot. Month over month, February, 0.2%. So that's not a lot between the 2 months. That's where my argument came in. My argument is that, look, 0.1, 0.2, it won't take much of March to pull it down. Now, here we go. So according to, and this is some of the forecaster consensuses for Q1. Now, keep in mind, forecasters can be wrong. I see this all the time in the data. But right now, major banks and agencies, so, Bank of Canada, Vanguard, and a few others, they're actually predicting positive but modest growth in Q1. And some of them are seeing it 1 plus 4 to 1 plus 8. And I looked at that and I'm like, holy banana bread, that's a little high. That's a little high for sure. So overall, 2026 GDP expected to be the 1.4 to 2.4 range, well above the contraction territory. Well, yes, that would be. All right, so why is it unlikely? Let's find out. Early monthly GDP prints are already positive. All right, well, that's that's kind of like some of the initial background work on it. So that, yeah, it could be positive, maybe. Let's see, domestic demand, consumer spending plus government investment has shown a bit of resilience. And here's kind of what I was thinking on the weekend. Higher oil prices from the Iran conflict are actually a mild net positive for Canada as a net energy exporter, even with the LNG shock. And according to, let's see, the Bank of Canada's own projections as of late January assumed a rebound in Q1 after the Q4 dip. Okay, yeah, they did for sure. So interesting. Now, and this is basically, here are some risks. So here are things that could maybe still impact it. Well, it's hard to say, right? Because the data's already happened. So I would put salt with this. But if we have a major escalation in the Middle East, so deeper LNG oil disruption could hurt consumer spending via higher fuel prices. Persistent trade tariff uncertainty with the U.S., dragging on business investment. Consumer confidence collapses or housing weakens further. Q1 could come in softer than expected. Okay, so here is, yeah, this is kind of the bottom line. But all right, let's pull that away. Yeah, anyway, that's kind of a cool little thing. I thought it'd be fun to just sort of look at that. All right. Okay, let's move over here to Dorpat. Let's see. Oh, the deadline is now Tuesday, 8 p.m. He extended it 2 hours ago. Like I said, he's been unhinged today. He included Allah is great in his latest post. Is that explains something. Oops. Sorry, guys. I want to head over here for a second. That explains this. Here, give me a second. Let's just go. News. So, Treasury report. I was like, praise be to Allah, and they've got a picture of Trump there. And I was like, what's that about? Now you just explained that to me. All right. Holy banana bread. All right, let's move back to a chart. Nice. It's about respect. I have friends with different political religion but we enjoy each other's company as friends and always good to see how others see the world. Yeah, absolutely. I'm not really what I would call a religious person. I'm I don't know if I'd call myself agnostic or atheist, but probably closer to atheism than anything else. So, but I like bunnies. I like rabbits. I like Easter. I like spring. I can appreciate all of the holidays. But yeah, absolutely. That's the thing. I certainly respect, and I respect holidays that I've never even heard of before. It's like you tell me you're celebrating whatever. I'm like, oh, cool. Have a good one. Let's see. Zyborg says real estate. My RMAX is in the red right now, but this is one of the few holdings I have that seems long-term stable enough. I don't actually care. Yeah, RMAX is nice because, and this is an ETF, so it is an income ETF. But here, let's actually pull it up. There we go. Like it hasn't. Well, it is Hamilton as well. Hamilton, they're pretty good. I like Hamilton. They're really good at their with their funds. So, whoops, I don't want the key data. I just want the overview. Let's bring it up. We'll bring it up we'll go to the 3-year. So yeah, it has, when it initially, this is the thing you have to sort of realize. When this fund initially launched, you might say, oh, well, that's a really big hype thing. And it was, but this was also when rates were being cut. So we got a good movement up to the upside in REITs because of the rate cuts. So then the rate cuts pretty much stopped, and then we had we had some negative stimuli. One of the big negative stimuli we had for this, and you can sort of see it right about here. That's when we changed the rules in Canada for immigration, and we cut a whole bunch of immigration. That did have an impact on REITs. And that, yeah, it certainly happened. And then since we've had this big plus, a big minus, they've mostly, for the most part, been pretty steady. So I like this fund. I still like it. They've got a half-decent dividend. It's not super crazy. They also have 50% US exposure, 50% Canada exposure. So you're getting exposure to REITs on both sides of the border. I like that as well. So I do like this one. This is one that I've had in the 0 to 100K, and even if it goes into the red, I'm okay with it. It's providing some good income, and I think it'll be fine on the long term. Like right now, with how rough things have been lately, look at lately, it hasn't really, yeah, there's been some volatility there, but it hasn't been that bad. So yeah, RMAX is definitely a good one. Bismarcky, Taco Tuesday coming once again. Maybe. Brian says, good afternoon, everyone. Let's see, the 1.4% GDP was annualized, so 0.35 for Q1. Okay, fair enough. Trump copied King Charles. Did he really? Oh, Chad, yikes. Now let's see here. Brian, he also dropped an F-bomb on his live social post, or his lie. Oh, his lie. I got it. I was thinking lie social. What's that? No, it's Truth Social, but it's a lie. Okay. Gotta love having such a classy president. The world wishes their own governments were as classy. Classy like flip-flop carny or carbon tax. Oh yeah, let's try not to throw any words. Let's try, and that goes both directions. I know. I'm bad at enforcing it. I admit it. Get Rich says, I'm loading on XRP in the coming days and weeks at these discount prices for sure. Yeah, no, and I like XRP. And this is a financial channel, not a political or religious one, so let's stay the course. Yeah, absolutely. That's the thing. It's one of the things, though, that is kind of interesting with finance, is that politics really impacts it a lot. So sometimes we gotta go into the political weeds, but we can still be classy about it. We can still be classy, folks. Let's see. Nick says, Canadian funds, I wish I could get some of them are ETFs. EU rules to protect stupid people that shouldn't be investing until they study how things works on stock markets. Yeah, I kind of wish that it was just easier. Like I also would love, like I wish it was easier even here in Canada. I would love to have more exposure, not through, obviously I like ETFs, but I would love to have more direct exposure over to the European markets, the UK markets, even the Australian markets, and heck, even the Asian market. So I'd love there to be a little bit a better ability to invest wherever I want to. Now, there has been this idea. I've seen it floating around on YouTube. I don't know how serious it is, but there was an idea that Canada should join the EU. I think if that happened, you probably would see things get a little bit easier, perhaps. Perhaps. Um, so I don't know. I don't know how much truth there is to that one, though. I've seen people talking about it, but I haven't seen anything, or I haven't heard anything from government saying, "Oh yeah, this is something that we're perusing." Um, let's see here. Yeah, exactly. Yeah, I mean, finance has to be the key part. Len says abolishing the carbon tax is essential. Failing to do so risks turning food insecurity into a serious and widespread crisis. Food is very expensive out there. Well, it's not. It's not even the carbon tax. Um, yeah, I'm not a big fan of the carbon tax, and I know we've got the industrial one. I'd love to see that disappear, but the other issue is fertilizer. Fertilizer is going to be an issue, and that will impact world food supplies. Now, luckily, I guess in Canada, well, here's the thing. Yes and no. I was going to say, luckily, we produce a lot of food. So you would think that we would be fine. But the problem is, if you are a big-time farmer in Canada, a lot of times you've pre-sold your crops. It's not like we can just sort of turn around and say, okay, those crops are going to Canada instead of whoever you've sold it to. Well, no, there's deals in place, and a lot of them have pre-sold it. So a lot of that food is already taken. And it may not even be Canadian companies. It could be U.S. companies. It could be European companies. There's many companies it can be, but it's kind of an interesting way when you look at how the whole food system works. Jackie says, I agree. Also, I'm here for financial info, not immature political name calling. All right. Mary Finn. Mary, welcome back. Mortgage fixed or variable right now? That's a great question. I do think we're going to see some rate hikes. And I'm still kind of leaning to maybe one this year. But even if we only get one, I would look and see what deals you can get both. But if I were the one setting up a mortgage right now, I'd probably be looking to lock it in. I'd probably be looking at a nice little fixed mortgage. That's what I would be doing. Bullish for Canada. Yeah, absolutely. Chad, don't get me started on politics. Most will hate me. No worries, Chad. No worries. Well, costs more for farmers to farm, more to haul it due to carbon tax, more to mine potash than to transport. And like always, the consumer will always pay. Yeah, well, the consumer always pays one way or another. I mean, that's the thing. We know prices are going up. We've never truly got a grasp on food inflation. Even though inflation has come down a lot, food has been kind of very resilient, the inflation on the food. So food has been getting pretty expensive, and nobody can argue me on this, because I'll tell you, all you got to do is just go to the grocery store and look at the prices. They're up. I'd actually be curious to know if there's any food that hasn't really gone up. That'd be a good question to know. But yeah, I mean, I know just every time I order, what is it? Something I was ordering lately. Was it the cat food? No, it wasn't the cat food. There was something I ordered. Oh my gosh. I don't know. There's this one item that every time I order it, it seems like I get a notification from Amazon saying that the price has increased. Might have been the protein. It might have been the protein, maybe. What can I say? Chad says inflation better than deflation or stagflation. Bananas didn't go up much. Oh, well, that's good. I like bananas. So, yeah, so obviously stagflation is your worst case scenario, and deflation is not that good either. But with stagflation, basically that's high inflation with a low economy. So your economy's not growing, but prices are going up. So people can't afford the new prices, and that can be a pretty nasty situation. Now, deflation, oh boy, Deflation is something that we don't want. And you know, and a lot of people will say, but why? Prices coming down. That would be great. Yeah, but look at it this way. And you know what? Let's go back to the whiteboard since we have it up. All right. So, all right, if let's just say this is the price of a product over time. All right. So, if you've got money in your pocket, we'll put that there. Are you going to buy it here when you know that tomorrow it's going to be here? Or if you wait a week, it's going to be here? You know, or if you wait maybe just a couple of months, it's going to be here, the price. That's what deflation does. So if deflation tends to stimulate people not to spend, because if the price is coming down, you're going to save money by doing nothing. And that's not good for the economy. That's one of the reasons why inflation, so I'll just put an I here, inflation is great. Inflation is good for us, but moderate inflation. So, you know, most people think a 2% inflation is a good target. That's kind of where the Bank of Canada goes. You know what? I would say we don't even need that much inflation. I would be happy with a 1%, honestly. I think 1% would be fantastic. It's like, yeah, let me have that 1%. But 2%, I think 2% is nice because it does give you, and I think this might be where governments sort of look at it, is that it gives you a buffer. It gives you a bit of a buffer. So, you know, if 2% your target and you just happen to have a month where things do deflate a little bit, you know, even if it deflated down to like my 0.1%, that's fine. You know, people still have an incentive to buy now instead of tomorrow. And that's the whole idea of inflation, is to get people to keep spending their money when they get it, because that money goes into the economic engine and it goes round and round and round and, you know, keeps the economy running. Deflation, like I said, deflation, you don't want deflation because, you know, you'll wait. And even then, like, look at this. If you decided to wait that month, you've already waited a month. Why not wait another month and get it really cheap? So now there are types of deflation that do happen. So for example, there's this thing called mass production. So once something can go into a mass production situation, that will lower costs on it. So, you know, and anybody who's ever been a first adopter, like if you were around when VCRs came out, if you bought the first VCR, you're paying a lot for it. You know, 10 years later, when everybody has VCRs, you're paying a lot less. So I know I can remember with, with DVD players. The first one I bought, it was about $1,000. I paid $1,000 for a DVD player. It was a Gen 1. You know, quite literally, that same one I bought, if I had waited 6 months, I could have got it for about half. So, you know, that will happen with mass production, but that's technically not deflation. It's just costs are coming down, and that will happen with a lot of things. Anytime there's a new technology, it's going to be expensive at first, and that price then, of course, comes down. All right. Chad says, took a buddy out for lunch Friday. $67. Oh, boy. I don't know if I have any friends I like that much. I'm just saying. Oh, boy. The bill, 67. That's incredible. Let's see. Zyborg talking about farming. Nutrien doing okay, since apparently a lot of the world's fertilizer also goes through the Strait of Hormuz. A few wins, swing trading it last couple of weeks. Oh, yeah. Oh, no, Nutrien. I mean, this is, you know, Nutrien is a company that will benefit a little bit from this because, yeah, absolutely. You know, if that conflict goes on more and fertilizer becomes at a premium, of course, yeah, Nutrien will make a lot of money. Now, mind you, and this is the other downside, any contracted, like they may have contracts with other companies with specific prices for fertilizer. They would then be legally still have to sell it at that cheaper price to anybody that they're contracted with. But any of the stuff that's not contracted, that's going onto the open market, they could certainly raise the prices to you know, meet the demand. $67 to eat and was still hungry. Glad I don't eat out often. Yeah. And also I find too, it's kind of funny, like depending on the type of food, like if you go, I don't know if you've ever been to a Chinese food restaurant. You guys have all been to Chinese food restaurants, I'm sure. But you can go there and you fill up on rice and, chicken balls and stuff. And quite literally, you feel like you've just had Thanksgiving dinner by the time you're leaving. And 30 minutes later, 30 minutes later, you're hungry. It's funny. But it's because it's a lot of it's really processed. It's very easy to digest. So it goes through you pretty fast. Chat, fuel goes up, so does potash. They're correlated as metals goes down. Yeah, I mean, obviously, as the fuel. So as we get oil-induced inflation, yeah, that's going to impact everything. Anything that has to use any kind of transport, and that's pretty much everything. So yeah, there's going to be some inflation from that rate across the board. But that's going to be the reason that we'll see a rate hike. But the problem, and this is what the Bank of Canada has to figure out, is can we do it while the economy is tanking? So if the economy keeps tanking, so especially with jobs, so we got a jobs report coming out. Is it this week? I don't know. It's pretty darn soon, but here, let's pull it up. Let's see here. Stocks and investing reports, Canada. All right, here we go. Let's see here. All right, there's Friday, April 10th. There we go. April 10th. All right, yeah, so we got one coming out here on April 10th. So this will be the jobs report. So this Friday could be an interesting day. So this will definitely go a long way towards figuring out what we're going to do. So right now, so unemployment was at 6.7, and they're actually, yeah, they're forecasting, well, the consensus is 6.8. Oh boy. So they're already expecting it to go up, and there is a forecast out there for 6.9. So, yeah, that's not going to be good. Not going to be good. Now they are forecasting that we add jobs. All right, that's fantastic. So 30,000 is forecast, 10,000 full-time, 20,000 part-time. We're going to see. We'll take a look. We'll see how this, of course, turns out on Friday. But we want at the very least hit the forecast numbers or do better. Obviously, with the unemployment, if we could somehow hold the 6.7, that would be really great. But I doubt it. People are losing jobs. So yeah, it's going to be up, unfortunately. Even though we're adding some jobs, it's still going to be up. All right. Larry says, I don't even understand why we would want any inflation at all. I don't understand keeping it exactly at 2%. It's just that incentive to buy things. That's basically what it boils down to. Let's see. Metals go up. Potash goes down. Oh, never mind. You just answered it. So there we are. Chad, stop printing money out of thin air. Canada needs to get oil and gold reserve. Yeah, I'm not a fan of money printing. I mean, yeah, sometimes, you know what? Sometimes you don't have much of a choice. But for the most part, yeah, I'd certainly like to not do it. Let's see. Can't have a Federal Reserve debt-based economy without inflation. Cow, horse, chicken, sheep dung is the best fertilizer. No chemicals. Okay. Yeah, there we go. All right. Normally get kicked out all you can eat places, normally 20 to 22 plates I can eat. I get my money's worth. Holy cow, Chad, that's a lot. Yeah, wow. I'm color me impressed. Neil says no. All right. I don't know what the no is for, but yeah, no. What can I say? A hollow leg. Maybe. I don't know what the most. Actually, probably when I was a kid, I used to love going to Ponderosa, although it has another nickname. But I liked going to Ponderosa when they had all-you-could-eat shrimp. And they would just be bringing that shrimp around, and I could eat a lot of shrimp. I like shrimp a lot. So I used to like that quite a bit. Government should do whatever is within their control to help with grocery prices. Eliminating the industrial carbon tax is a start. Prices will go up again next month due to recent carbon tax hike. Yeah, no, I agree. I actually like Poilievre's suggestion of, even if it's just put it on hold for now. I would be happy to hear that. And I imagine once the House of Commons starts up, I think Pierre has finished his his trip around America. I think, maybe he's got a few more stops. I don't know, but yeah, I'm sure he'll push. I'm sure he'll push that in the House of Commons. I think it's a good idea. Tapeworms. Oh, you don't want tapeworms. Hey, when the government has to give a rebate for groceries, the government is failing and badly. Yeah, I think that's July. I think in your July GST, if you get a GST. If you don't get a GST, I don't think you're getting this rebate. But yeah, for anybody who does get a GST, you're probably looking at some extra money in July. It's not going to go far, though, unfortunately. Let's see. Brian says, the Mandarin chain in Ontario limits you to 1 hour and 45 minutes. I usually have 90% meat on my 3 or 4 plates before dessert. It's not cheap anymore. Oh, there you go. Really, 1 hour, 45 minutes. Wow. Yeah. Well, if you can't fill yourself in 1 hour and 45 minutes, then you might actually have a hollow leg. I don't know. Actually, I can't even remember the last time I was at an all-you-can-eat place. Yeah. So what can I say? Holy cow. Oh boy. And Brian says, yeah, I'm usually finished in an hour. Yeah, that's the thing, And I mean, the big thing I think is, try to hit your quality stuff. Stay away from the really cheap stuff. That's what I would say. But yeah. Let's see. Punky says I'm the same. 1 hour and done. All right. So what's the market's gonna do? Red, green, any bets? Yeah, and I was mentioning earlier that despite despite the stuff that we've been hearing so far on this weekend, nothing has really stood out. I think a lot of people came into this weekend thinking we were going to get boots on the ground, and that didn't happen. So I think the market's going to actually be, I don't think it's going to be a big green day, but I think we might get a little green day, at the very least, the first half. Obviously, if anything happens during the day, any kind of catalyst, it could certainly flip red. That's the danger of having a weak green day. But yeah, I think we're gonna have a green day. In fact, I will change. I will put the green up already. Let's do it. Let's just, whoops, that's not green. Oh, that's a little bit. That's green-ish. I see. I got one with a color wheel, so you have to manually. There we go. You have to manually find your green. I like ones that have like a green button, a red button. But I can hit any color under the sun. Now, well, I can attempt to hit any color under the sun. Chad saying, I think a green day. All right, there we go. Brian, I think right around, even at the end of the day, the U.S. did lose a few more aircraft on the final rescue. Oh, did they lose more? Oh, gosh. Yeah. Well, that's, Iran has been saying that they got teeth, so at least they're backing that up. Let's see, except for technology. Okay, so you're thinking technology is going to suffer a little bit, but everything else will be green. Could be interesting. Yeah, it could certainly be interesting. Obviously we had, I'm trying to think what's been going on. Well, yeah, the Claude code got leaked, so there was that. I haven't looked at that much into that so far, but apparently it was quite a bit of information, so that's never good. And that's kind of funny because even though Anthropic, even though they've got this big tussle with the government, a lot of people have been moving there's been like quite a few people moving from like ChatGPT over to Anthropic because a lot of people like it better. So yeah, that leak is probably not at the best time. So we'll have to see if there's any impact. We'll also see if they have to how the leak happened, how they can fix it and prevent it from happening again. And that's a thing. When we talk about personal information, one of the things that you don't want is you don't want your AI bots getting hacked or getting leaked. Well, in this case, it was just a data leak. But I would be concerned, like, because how many of you guys tell your, whether it be ChatGPT or Claude or Gemini, how many of you tell, like, how many people, well, maybe not so much you guys, but how many people tell their chat AI bot things that they don't want to be public? Like a lot of people use them for their doctor, like, hey, I got pains here, there, and everywhere else. Maybe you don't want people to know. So it is kind of interesting that, there could be some security concerns around there. So I really hope that the AI companies are, they may have taken guardrails off for safety of AI per se, but I hope the guardrails for safety of our data, I hope those are up and running at full speed. All right, let's see. Chad's also saying sideways for the rest of the year. Yeah, I think this is going to be, I think, and I did say this I said this in my prediction for the year. I do think we're going to see a lot of volatility this year. Oh, you know what? I just saw, I know Chad's talking about cash down there, but I haven't got there yet. But, yeah, look at this. Bitcoin is it's on a slow move. But I do like that. In fact, I wonder here, let me just see something. We might actually have a column. We might have a channel here a little bit. Yeah, you could say that's a little bit of a channel. That's kind of interesting. So there we go. So if that holds true, by tomorrow we might be up around 68 because if it comes down, goes back up. So yeah, very interesting. We do have a channel. We have the beginnings of a channel. I always like channels. All right, Bismarcky. Some passive ETFs will be down tomorrow as it is distribution day. Yes, absolutely. Absolutely. So yeah, because, well, wait a minute. Wait a minute. Not necessarily. Not necessarily. So, because, yeah, so, I mean, when you're looking at the dividend, right? The dividend actually goes down, not on the day they pay, but on the day they declare it. So ex-dividends, basically ex-dividend day is when that when it comes down. So if tomorrow is the day that you're getting paid, that's already been taken out on ex-dividend day. So that shouldn't impact things. Navi says the markets need to get above the 200 moving average. Last April it went under and then tagged it and fell 15% after. Cash is king. Oh, and here's where the cash is trash. Cash is king. Yeah, Brian says, I don't use any of the AI as I have found them to far too often be wrong. Good old Google and look myself. What I always say, Brian, is, I wouldn't be afraid to use AI. Just ask it for sources. Where did you get the information? Because then it can give you the sources. And that way there, if it gives you some claim and you're like, huh, I don't believe that, you can just go right to the source. So I certainly like it that way. I certainly like it that way. Chad, lose min minus 6% a year, due to inflation. Oh, you're talking about cash. Okay. VDY seems like a safe bet. I like VDY. And here, actually, we haven't looked at VDY in a bit. Let's pull it up. VDY. There we go. Yeah, they were up 0.88 on Friday. But here, let's just take a look at the last year. So, that's a pretty nice looking slope for a year, for sure. Yeah, VDY has absolutely been pretty darn good. And I do like VDY quite a bit. All right. Chad, 2020, 2022 was buying silver heavily, 5x my money in 4 to 6 years. VDY, always a great choice, and monthly dividends. Awesome. Awesome. All right. Oh, so good. Nico says ETFs or stocks don't go down on distribution day, but on ex-dividend day. Yeah, that's exactly what I was saying. On distribution day, the opposite may happen with all drips and or manual reinvesting. That's a point I didn't bring in. But yeah, Nico, 100% correct. So yeah, if you think about it, that does create buying pressure as it's, as a lot of the stocks or ETFs or shares or units are being gobbled up by those redistributions. Brian, let's see, my former business partner trusted it 100%. I don't know how many times I asked him where the hell he got that information and proceeded to show him the truth on websites. Yeah, but I will also say this too, Brian. Um, I don't know when the last time is that you've looked. Like, if I look at information I got off AI a year ago, it really needed a lot. It really needed me to babysit it a lot. Now it's about 100 times better. Does it still make mistakes? Oh yeah, absolutely. But not as much. It's not. It's night and day. It's night and day just in the last year. And obviously, if we move ahead another year, it'll probably be night and day again. So it has been getting better. It has been getting better. Hallucinations, not so much. Not so much anymore. But needless to say, yeah, depending on what you're doing, like if you're asking it for, a restaurant suggestion, you probably don't have to, do a lot of legwork. As long as the restaurant exists, you're good. But yeah, especially if you're using it in a professional capacity, like look at it when it first came out. Those lawyers, there were some lawyers that used ChatGPT to help them write up a case, and ChatGPT made up cases that didn't even exist, and they were quoting it. They got called out big time by the judge. So I think now, if those same lawyers, hopefully they've learned their lesson, but if this had happened today, a lot better chance that it would have been more accurate for them. So, I'm not trying to say that you guys should just give up doing your own research. You really shouldn't, especially with finances. You want to do your own research, but I look at it, just use AI as a tool. It can help you. It can point you in the right direction, but you want to take it with a grain of salt. Finance-wise, yeah, I mean, ChatGPT gets things wrong still. Sometimes I'll be talking to ChatGPT about a ticker, and ChatGPT will invent that ETF as some other ETF. I'm like, what the heck? I've never even heard of this ETF you're thinking that this is. So sometimes if I want ChatGPT to find something, like if I'm looking for some obscure piece of data, I'll just give ChatGPT the website. I'll say, here's the address on this page. Tell me where I can find this information. And it's very good at that. Let's see, 2 weeks ago. Oh boy, yeah. Well, your business partner, he definitely needs to, maybe double check depending on what's being asked, for sure. Let's see. It was about scrap copper prices. I showed him the Triple M website numbers updated daily. He was off $2 a pound. Oh boy. Yeah. If you're looking for exact data, that's the thing. Like, I would never, like, if I wanted to know what the spot price is of uranium at this moment, I'm not going to ask. Well, I don't even think that's published. But all right, the spot price of gold, I'm not going to ask ChatGPT. Although, let's ask Grok. I'm kind of curious. And then we'll go and we'll take it. Well, actually, no, because I don't think. Hold on. First of all, let's see what it is. Is gold moving on here? It might be. No, it's not. It's not moving. I think it starts moving at 6. If this, you see, guys, We have to remember to do this tomorrow. That would be kind of fun. Is anything moving? Well, Bitcoin is. All right. All right. So yeah, look at Bitcoin. Bitcoin's at 67,458. Let's ask Grok. I don't know if Grok will actually even. Yeah, Grok should answer. What is the spot price of Bitcoin right now in USD? Let's just see. Let's just see for fun what Grok comes out with. All right. Oh, look at that. It gave us a range. It's between 67.4 and 67.5. Yeah, it is 67,456. All right, Grok, you got it. But yeah, and here's the thing. You know, right now, this is what I like. Like with Grok, look at this. It gives us all of the web pages that it pulled all of the information off of. So that I do like, and that's something I always say that is important to be able to do. Like, don't just sort of take that and say, okay, yeah, double check. And this is not something I would normally ask. I mean, it's not when it's so easy. You could just look it up yourself. You know, look it up. Just look it up. All right, there we go. Chad. I don't know, thinking to pull out some money from the TFSA, buy a 2-bedroom apartment condo. Not sure yet. Hear horror stories about tenants. Found a unit I want for $67K. Payments come out to $77 a week. Oh, that's not too bad for 21 years. That's not a lot of payment. But here's the thing. If you are going to buy it, I mean, you know, I would pay them more. I would pay them a little more. That way there, because a lot of times when you look at something over 21 years, I mean, obviously a lot of that is going into interest initially. So, you know, I like to pay a bit more if I can. Anyone here have rental properties? Good question. I do not know. Maybe. You know, as in, Chad, are you asking if they're renting a place or if they are actual landlords renting? I think that's where I think you're going. I think you're going with the landlords renting. So what can I say? Yeah, I'd take a 5-year mortgage, then pay it off. Yeah, absolutely. You know, I'm not a big fan of, not a big fan of debt, but you know, it can be good. It can be good, I guess. Brian says you could be taking out tax-free money and make it taxable again. Oh. Oh, so you're thinking, okay, I'm just trying to see how is it going to become taxable? What? Okay, so let's see. All right, so he's taking out tax-free money from the TFSA and then putting it on a rental property. Okay, I see where you're going. Yeah, I mean, I guess after you buy that property, the property will obviously be taxed. Will be property tax, things like that. But, you know, it's still, you know, but it also appreciates in value. So, yeah, I kind of see that. I kind of see what you're saying. Chad says yes, but now have more assets. By pulling out a TFSA is not able to go into the TFSA. Well, here's the beautiful thing, though, Brian, is that when you pull that money out of the TFSA, that room, you do get it back. You will get that room back, at least in the TFSA, come January. So that's not too bad. The cap gains, etc. Tom said, I had rental properties. Last one turned into a major tenant headache. They can absolutely turn into a major headache. Yeah, no, I worked briefly, I don't know, for about a year maybe. I was doing I was hired as tech support. So I was doing some of the tech and networking and running wires and such for a small real estate company. But it's a small company, which means even though you're in there for tech, you end up doing a lot more. You know, that was the thing. On days when I didn't want to do a bunch of extra really strange stuff, Those would be the days I would be updating computers. And as long as I was sitting there and there was a progress bar on the screen, and back in those days, Windows, there always was. All I had to do is if they came in and said, what you up to? I just have to point to the progress screen, and I was good. But while I was there, I did some accounting. Um, I helped evict tenants. I took rents. I I dyed the boss's hair once. Don't know why. Uh, he just uh, he just wanted to get rid of the gray. So I did a lot of things. I did a lot of things. All right, Chad. And what's going to climb faster? Any stocks or property? Well, it depends. It depends. If you had bought a condo in Toronto or Vancouver at the peak, you might have a different you might have a different answer for sure. Let's see here, Brian. You get it back, but end up using taxable money to put it back in. Oops. So what's deterring me, Tom? Or deter? Okay. Let's see. Too many tenant rights. I sold during the pandemic. Forever to evict. He sued. Very messy. Yeah, yeah. There's like a thing. Like there's people. There's actually there's people who I don't want to call them professional, but they're professional freeloaders. I'll call them professional freeloaders. And I heard about there used to be one. I think there was one in Vancouver, and this guy basically he got an apartment. He never even paid the down payment because the guy let him in, let him get set up, and then he never paid anything. And then the guy tried to evict him, and basically this guy would appeal at the end of each because you have like you do the initial eviction. The person has so many days to appeal. So this guy was appealing right at the end of every single step of the process. So it probably took, I can't remember the exact amount of time. I thought it was something like 6 months to get the guy out, and then he just moved into another place and did it again. And that's what that guy had been apparently doing, just going boom 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 through different landlords and fighting them all the way. And gosh, I don't even know how long, if you did it perfectly, I wonder how long you could avoid being thrown out. That's a good question. Maybe Tom knows. Chad, what province, Tom? Sounds like Ontario. And there we are. Yeah, Tom is in Ontario. But yeah, there are people that will do some bad stuff like that. You know, and plus, oh boy, you'd be surprised how much damage people do. And I don't know what it is. Like, sometimes I think it's, people who are renting, it's like, it's not my place. I don't care. So, damage deposits. You definitely, if you're renting out, so Chad, make sure you get a damage deposit. I don't know. Well, depending on your province. Some provinces have damage deposits. Some provinces do first last month's rent. I don't know. But, and it's funny. Oh, speaking of damage deposits, I had one place that took my entire damage deposit. There was no damage. There was zero damage. It's like I did everything by the rules, and I think it was more shady. So what had happened is after I moved out, I waited and I never got my damage deposit. So I contacted the landlord, and he said, "Oh no, you used that up." I'm like, "Well, how did I use that up?" They said, "You remember that mattress?" I was like, okay, so what happened, and sort of the step is when I was getting ready to move out, I had a mattress in the bedroom, and I was like, oh, and he was like, oh, what are you going to do with that mattress? I said, oh, I'm going to throw it out in the bin. I'm going to take it out and throw it out because I don't need it anymore. And he's like, oh, we can take care of that for you. I was like, oh, great, thanks. This was Nova Scotia, so people are nice. You don't think anything of it, until I was like, and he was like, oh no, you lost that mattress removal fee. So he basically manipulated me into leaving the mattress for them to throw out, thinking he was just doing something nice so that he could keep the damage deposit. Anyway, I'm still bitter. That was many years ago, but I'm still a little bitter about that. It works in both directions sometimes. Chad says, yeah, I thought so. Saskatchewan mentality is 100% different. Brian, I know a lot of MC bikers. Oh, boys, don't wreck the property. Feel free to call the place your own until they move out. Let's see here. Get a flat or vehicle troubles. People still stop and help a fellow out. All right. All right. Oh, Tom said my tenant did a slip and fall. My neighbor had cams showing him lifting fridges. He still got 28K as the insurance company thought it was cheaper than getting a lawyer. Oh, wow. Yeah, sometimes you know what? But it's still math, right? If you're an insurance company, you just want the lowest number possible, and sometimes paying out is the cheaper option, and that does happen. Even though even though when you pay out, it kind of makes you look like you're guilty, but yeah, that happens. That happens, unfortunately. Up here says I won't advise anyone to buy a condo. No, no rights for landlords. System only cares about tenants. I regret buying a condo in 2024. My tenant is owing around 5K now, and she won't leave the condo. Yeah. Oh boy. Yeah, it's tough. It can be tough for sure. One of the reasons why, if you want that real estate exposure, um, you know, a REIT, you're not looking in on tenants with REITs. That's for sure. Chad, yeah, Brain, I know a few rank people too, but hate going down that road. All right, let's see here. Brian, it's a wonder there are any rentals available at all. The risk reward is just scary. Um, yeah, yeah. And I will say it's also tough being a tenant too. It does work in both directions. Like I've had a I've had a couple of bad experiences as a tenant. Probably the worst was in Vancouver. So I was renting a place in Vancouver that was in a pretty good location. I had a half decent rent. It was, I had no intentions of leaving, and it was an apartment. So I kept coming home from work, and I noticed different people getting evicted. I was like, okay, I didn't realize I had a lot of riffraff living around me. So, yeah, I didn't think anything of it until one day I came home and there's my eviction notice on the door. And I'm like, what? And I'm looking at the thing and they were evicting me for sound. Now, I use headphones when I'm on my computer. I pretty much the quietest person that could be. I went and talked to the landlord. I said, look, I don't make any sound. They said, we got the complaints. Person's a reliable person. I'm sorry. We got to do it. And so I didn't fight it. I left. I left. Fine. But it turns out what they were doing is this was just before the Olympics. They were basically evicting people, renovating each apartment as they evicted them, and jacking up the rent because people were wanting to get apartments and things in that area because of the proximity to the Winter Olympics and all of that were going to be in 2010. So I was just like, I can't believe it. I was a victim. I was a victim of corporate greed. But it happens. It happens. And the other one, also in Vancouver, it was a situation where I knew I was in trouble when the owner sold the place. The new lady, a lawyer from Los Angeles, she shows up and she brings a bottle of wine to each tenant to introduce herself. And as soon as I got the bottle of wine, it was a nice bottle. I was just like, we're so screwed. We're so screwed. And yeah, we were. Quite literally, a few weeks after that, we got everybody got an eviction notice, basically saying that, yeah, we're going to be using this building for some family members, and you get a free month's rent though, because if they evict you for that reason, they have to give you a free month. So I got that, so that was okay. But I was just like, that was a place I really liked. I really liked that place. It was huge. It was huge. But yeah, come to hear afterwards that her mom never showed up to live there. I think they took my apartment and actually split it into two. It was a nice apartment, and getting a big apartment in a place like Vancouver for a half decent rate, it's rare. But oh well, I had it for quite literally 6 months. All right, let's see here. Tom says, exactly, Brian. Chad, all right, this is why I ask questions, get other people's opinions and experiences. Thanks, guys and gals. Looking like I'll just build my garage then this year. Well, You could, I wouldn't rent out your garage. But, it is fun. You know what? In a way, if you were going to get, I don't know if I would, if I was going to get into real estate, I don't know if I would be thinking like maybe get something that's, Airbnb compatible maybe. Because if you're doing short term, it might be, and once again, I'm not in the real estate game, so I don't know. So take this as 100% pure speculation, but I wonder if going into something like a B&B type situation, if you bought a place, I wonder if that would be more profitable. I don't know. Now you can do long-term B&B, but nonetheless, this I don't know. But what can I say? Holy banana bread. Ah. All right. Oh, guys, we're at about 2 hours. We can go anywhere from 2 to 2.5 hours. So, if you guys, I'll put the call in for your final questions now. Not saying we're leaving. If we keep talking, we keep going talking. But yeah, if you got any final questions that have been burning a hole in your pocket or in your tongue, or well, I don't know, just throw them on in. 2 more likes to 50. Oh, is that it? Well, guys, two of you, Brad and John, just click that like button. Click that like button. I hope the guy who left because I'm apparently a liberal chat box, I hope he at least hit like on his way out. What can I say? Chad, got too many vehicles, hate cleaning the snow off in winter, and need somewhere to park the boat and sled. Oh, there you go. Brian says, I'm going to head out. Having a great evening, everyone, and good luck tomorrow. Awesome. You're at 49 now. Okay. Well, we're almost there. We're almost there. I'll refresh. I know I did. I said I'm not going to look at them, but I'll just take a gander. We might as well. Oh, there we are. We're at 52. So there we go. We're fine. We're fine. I look at it that way. Pierre, some condo buildings have regulations against making apartments into B&B. Good example is my condo building. Yeah, and that's why I was saying you want to make sure that you can use it at B&B if you were going to go that route. So it is, yeah. And I think, if I remember correctly, I thought they were actually making it a little more strict, the rules for setting up B&B. And part of the reason, and if I remember correctly, was to encourage more people to actually rent apartments opposed to turning them into B&Bs to try to help with the housing crisis. Oh boy, it seems like we've been going after one crisis after another. 53. Punky, what do you think of Easy by Evolve? I know Biggie and Canny haven't been doing great, but would you consider it to other high yield all-in-ones? I would not consider it at this moment. Right now, the problem is out of all of the funds in it, the only one that is in the positive is Sexy. So Inti as well is not doing super great at this moment. So right now, I really think that they need to do a little bit of retooling on a lot of these funds, because income isn't everything. And you guys know I'm a fan of income ETFs. I'm a fan. But I have a rule. If the market is going up and you've got an ETF on that market, you need to, even if you go flat, I'm okay, but you had better not be going down. And unfortunately, that's what Canny has been doing. Like when the Canadian market has had the year that it's had, Canny came in, and even in that big pump of the Canadian market up to all-time highs towards the end of the year, Canny didn't. I mean, look, let me show you. Canny has just, there we go. Here we go. Let's pull it up, and we'll actually just go to the 1 year. Canny has, and it's not even going flat. It's actually gone down. It's gone down a little bit. So this should have been, to me, this should have been a little bit different. It should have been up. Now, I think part of it is that they're writing really aggressive covered calls on this one to get those high yields. So fine, I don't mind. I don't mind being aggressive. I don't mind high yields, but make sure you're not getting to a situation where that value is going down. When we talk about ROC a lot, so return of capital. So in a case like this, yeah, we've got a lot of ROC happening, and this is what I would call bad ROC if that price is going down. To me, it's bad ROC. Now, they have made, I think they added Canadian natural resources to it. So I'm hoping that we see a bit more changes, but I think what we may need to do is pull back the aggression just a little bit. Yeah, that would knock that dividend down a tiny bit, but I think that would be very healthy for the fund overall. And right now, I think easy is just, if I don't like most of the components in easy, like I don't like Biggie. Biggie's doing kind of the same thing as Canny. So Biggie, Canny, and Inti, three quarters of it are moving in the wrong direction, in my opinion. So I do, and I love Evolve. I'm going to say this. I love Evolve. I think they're a good company. I think they have a good management team. So I do expect to see some retooling. So keep in mind, even though I've told you what I feel right now, that's subject to change because these funds, they're not that old. I mean, look at this here. This was launched back here in September. So, quite literally, they're just past 6 months. I think they're closer to 8 months. But, let's see what happens from here. Let's see some more retooling on the Evolve side. Get these funds working because I think Evolve has had a very good track record with a lot of their funds. So I think they can get these. I think they can turn them around. But I want to see some proof. I want to see some proof that that's starting to happen. All right. How will these difficult tenants affect apartment REITs, CARP, or kill them? One is a lot of times those are not the companies that those difficult tenants are getting into. If you've ever tried to apply at a place like Killam, you're jumping through a lot of hoops. They're running credit checks like crazy, and it's not easy to get into a Killam. If you've got anything on your record at all, you're probably going to get turned down. So, you tend to not find the difficult tenants and those people with really spotless credit ratings. So these bigger companies, not really a bit of a problem. So a lot of times what these difficult tenants are doing is they're not renting from the big companies. They're renting from individuals who are doing their own, So, like mom and pop buy an extra house and decide to rent it. Along comes difficult guy. Unfortunately, difficult guy, charms his way in. And a lot of times mom and pop, they're not running credit checks. They're just going by their gut. Now, unfortunately, your gut can be wrong. And that tends to be what ends up happening. Let's see. What do you think about the crash in the Telecom? Rogers took the most damage. Yeah. There was definitely, I don't know if I'll call it a full-on crash, but yeah, they definitely suffered a little bit. Now, I haven't seen anything to indicate exactly what was the cause of it, but I also wasn't looking, to be honest. I had 2 days off. I was like, I'm not doing any work on my 2 days. I don't get 2 days off. So I did nothing over the weekend, like nothing, zero, zilch. Chat says Rogers really, though it was Bell and Telus and Rogers was doing all right. Okay, Ian says, in at a donut shop with my girlfriend and her friends. I just popped in to hit the like button. Nice. That's dedication. Thank you, Ian. Chat says, have a French curler for me, also known as a tractor tire. All right. A tractor tire, a French curler. Is that like an onion ring? I don't know. I'm just trying to think what that could be in it. Oh, wait a minute. No, it's probably a donut. Duh. All right. What am I thinking? Oh, God. Yeah, it's fun. It's fun. Oh, boy. Oh, excuse me. I still get lots of coffee. The donut. Yeah. Now, here's the funny thing, guys. Is it donut or is it donut? I always see two different spellings. I don't know if one of them is actually more legitimate than the other. So donut or donut. So, you know, I don't know. Let's see. Already have a good night. All that hair naturally blonde dyed red. Yes. Yeah, and it's also really bright because I did it today. It dies down very quickly. No, but for, you know, at least now for the next couple of days, I can stand in for like a pylon, a safety beacon, guide ships in from sea, all of that fun stuff. Oh boy. Oh, what can I say? What can I say? Oh my gosh, I'm almost out of coffee. Oh, guys. That to me is always the worst part of the stream, is when the coffee is almost gone. Let's see. Looking like an NDP candidate? No, no. Oh boy. Actually, we got some by-elections that are happening pretty darn soon. I know the early election, the advance polls are open. So I think there's one in Quebec and two in, I think actually the other two are in Toronto. So, you know, we could have some election stuff happening pretty soon. I think when is the actual election? I think it's the 14th, maybe. So yeah, that'll be cool. I mean, maybe, I don't know. Yeah, all right, guys. Oh gosh, this may be a shorter one. It's a weekend. You know what? It's Easter weekend. I don't mind it being a little shorter today. If we're ever gonna have one that's only 2 hours, well, actually, we're at about 2 hours and 10 minutes almost. So yeah. All right, guys. This has been another great show. We are back tomorrow. We have a market close, but I did say that we're going to retire a pair of goats before I go. So let's do it. We'll play each one last time, and then I'll delete them. I mean, of course, if I can't get it, yeah, I'm gonna delete them. All right, let's start with. We'll start with. We'll start with the Hannibal Lecter goat. That's what everybody's been calling it. All right, here we go. All right, I may not miss this one. But what can I say? That's the first of our Easter goats. That is now being retired. I just hit the delete button. It's gone. It's gone. All right, we got one other one that is retiring. Let's do it. Let's do it. This one I like better. You know, of course, we have lost Sora. Sora is now gone. How much fun. All right, I'm going to just delete that one. There we go. So we have now officially retired the Easter goats. I have to come up with a new goat. I don't know how yet. Maybe I'll find it. I'll see if I can find something tomorrow. Because, you know, I like the seasonal goats a lot. So we'll have to figure that one out. All right. Yeah, exactly. Have a great week, everyone. Get a space kitty. Yeah. Well, we got our space goat. That's my favorite one right now. And if Sora had not shut down, I was going to. I had plans to replace them all with cats for April Fool's Day. But oh well, Sora did its thing. All right, guys. Another fantastic show. I will be back, as I said, I'll be back here again tomorrow. Until then, I do have 2 words I want to say before I go, and that is bye-bye.